Hello fellow students, I created this little calculator in Excel using formulas to help me determine the adjusted basis, recognized gain or loss, recapture, and a 1231 gain or loss on section 1250 real property. I also created one for section 1245. It is another video. If you want to check my other videos, if you like the video, please subscribe. I'm going to be adding more videos related to this class. So in this calculator, it's pretty simple. The first three cells on the left here are the figures that you would enter in from the problem that you are provided from the textbook or from the instructor or teacher test or what have you. The numbers on the left here, these are all formulas, so don't enter any numbers in there. I'll show you the formulas I use here. So the first one is the adjusted basis, which is the cost minus depreciation. So the cost is cell number AJ243 minus the depreciation, $6,634 equals $19,366 in this example. The recognized gain or loss is AI243, which is the sales price minus the adjusted basis, which is $19,366. So the adjusted basis was greater than the sales price by $5,366, meaning that there's a loss of $5,366. Because there is a loss, there is no 1250 recapture, and they actually refer to this as unrecaptured in the textbook now. The recapture actually, I guess, isn't a thing anymore. It's everything that's not been recaptured yet. 1250 recapture. I still call it recapture. That's not the point of this video, but that's why I put that in parentheses here. Personal property, misspelled that, but personal property is taxed at ordinary rate. Real property is taxed at 25%. So real property, meaning buildings and things like that, are taxed at 25%. Personal property, like a vehicle, taxed at 15, or taxed at ordinary rate. So the 1231 gain or loss in this case, the 1231 loss was $5,366. So there is no gain, there is no tax. There's the loss is $5,366. So I have no tax showing up here. I put in the capital gains rate here for this taxpayer at 15%, which you can figure out. There's plenty of other places online where you can figure out the tax brackets and the capital gains rate. So keep in mind the capital gains rate doesn't necessarily line up perfectly with the tax brackets. You have to look at the tax brackets for the year you're looking at and figure out what their regular tax rate is, because most of the time the questions in the book will say that this taxpayer is in the 34% tax bracket or whatever. So if you look up the tax brackets and find out what income levels constitute a 34% tax bracket, then you can determine what the income range is that they fall into, and you can determine what their capital gains rate is using the capital gains tax rate list. So in this case, a single taxpayer's capital gains rate is if they are between $40,400 and or up to $40,400, their tax rate is 0%. If they make between $40,400 and $445,000 or $445,850, they're at a 15%. That would be most people. And then if they make over $445,850 and they're single, then they're going to be at a 20% rate. So I put a 15% rate in here. So let's go over here and let's say that instead of taking a loss, let's say that this person took a gain of 20. They have 25,000 sales price. They have a gain, although they sold it for $1,000 less. They have a gain, or they have not really. They have a gain of $5,634 because their adjusted basis has now been reduced to $19,366 from the depreciation. So although it may seem like there is no gain, $26,000 purchase price, you sold it for a loss of $1,000, but that, this person's been taking depreciation for several years, most likely, and so now based on the adjusted basis, they actually do have a gain of $5,634. So they have to recapture all of the depreciation that they were taken. Now, if they sold it for even more, now Notice how the recapture only goes up to the same amount of the depreciation taking. Everything over that goes into the 1231 gain or loss column, or gain or loss cell. So they have to recapture all the depreciation taken, and then all other gains go into, it's a 1231 gain, which 1231 losses are always considered no ordinary losses. 1231 gains are capital gains and taxed at the long-term capital gains rate. So the capital gains rate is 15%. The formula I have here is the tax is equal to the greater of either 0 or A0243 times A0244. So it's either going to be 0 or it's going to be 4,000 times 15%. I don't want a negative number, so I put a 0 in there. So over here, the tax is going to be the maximum of 0. And this is just the tax. So this, forgive me, this tax right here is only on 1231. This is the tax on the recaptured numbers. So over here, it's going to be the maximum of 0, or AN243 times 25%. So, like I mentioned earlier, if it's real property, it's taxed at 25%. If it's not real property, it's taxed at the ordinary rate. So I have this formula set up right now to be set up for real property, Section 1250. So it's set up for 25%. So that's important. That's an important call out. Real property is what this calculator is set up for. Otherwise, you would figure it out using their ordinary tax rate. So this number here is the sum of these two numbers, and the total tax is $2,258. So this is my 1250 calculator that I'm created so I can use it in my course throughout the rest of the semester. I know my video is not the highest production quality, but I hope it helps. Good luck in your course.